Okay, so you can even download them, or else I'll
All
share
right,
you YouTube link of this again if you want to
all
record.
right,
Fine.
sir. Yes, sir.
So today we are starting with the first topic, that is about introduction to accounting. Okay.
Okay.
So first and foremost, we should learn or know what is the definition of financial reporting. See, financial reporting is nothing but you are preparing the financial reports at the end of the year. Am I right?
Yes, sir.
So reporting is the the final stage. But before this, what happens is accounting. So under accounting, what happens, or there are different definitions given by different boards in the world. So there is a board called AICPA, American Institute of Certified Public Accountants. They have given their own definition, but here what we are following is the definition given in the book. So what does the definition of financial reporting say? So financial reporting is a way of recording. So you do the recording in what? Journals. Am I right?
Right. Yes, sir.
And you do the recording in journals, and then you do the classification by way of preparation of ledgers.
Yes. Yes, sir.
So you record all the entries in the book called journals, accounting entries. There's a way of recording them. So whatever the transactions happen on daily basis, those transactions are written as journals. So there is a way of preparing journals. So we will learn that also. So you want me to start from journals today?
Yes, sir.
That would be better, correct?
Yes, yes.
So before starting the journals, I would give you some basics of double entry system. So
Okay.
double entry system, it is better if we start from journals today. So double entry system actually was introduced by Luca Pacioli
Okay.
in somewhere around 14th century. So what Luca Pacioli observed is whenever he is going to a market and he is buying something, he is paying something for that. So he understood that for everything in the world there's a give and take, correct?
Yes.
There's a giving aspect and there's a receiving aspect. So
Right.
what he did is he divided the transactions which are happening on daily basis into three parts. Okay. So we
Okay.
also say this as golden rules of double entry system. What is that called?
Golden rules of double entry system.
Golden rule of double entry system. So what
Right.
is the golden rule of double entry system, or as per the double entry system, the accounts is classified into three types. I'll just put those three types here and explain you.
Yes, sir.
So first is the personal account.
Yeah, sir, I can't see your screen.
I've shared it already. Till now you can't see.
No, I can't see it. I was able to see it. Okay, now I can see it. Yes.
Yeah. So personal account, then comes the nominal account, and then comes the real account. So
Okay.
now, these are the the accounting is divided into, or the accounts can be divided into three categories: personal account, nominal account, real account. So what is this personal account? So here, if I say person al, that means this person. So this account would deal with a person, correct? It will deal with a
Right.
particular person, because what does this account say is, and he has like introduced two indicating terms. One is the debit and one is the credit. So he has divided the transactions into these two. Okay. So whatever the transactions happen, what is a transaction? Transaction is some activity which bring changes to your business, correct?
Yes. Yes, sir.
What kind of changes? Suppose you purchase goods. So inventory is coming in your business and cash is going out of your bank account or from your counter, or wherever the cash you keep. So changes are happening in your business. One account is getting reduced and one account is increasing. So these are the
Yes.
changes which happen in the business, and those are called transactions. Okay.
Right.
So he has divided the transactions into two parts, or two categories, or two indicating terms he has used to indicate them. So one is debit, one is credit. So what does debit say here? Debit the receiver. And very easily we can relate this because person, when I speak about a person can only be a receiver and a person can only be a giver.
Giver, right.
Second point, nominal account. So debit all expenses and losses. Credit all incomes and gains. Okay.
Yes.
And then debit for real account would be debit what comes in. So this kind of things have been explained there.
Yes, not really, sir, actually. Um,
They did
I
not,
mean,
they
way of
did not
explaining it
explain.
is a little different.
Yeah, they did not explain in that details also, correct?
Yeah.
So when I speak about the personal account, it is debit the receiver, credit the giver. When I speak about nominal account, the indicating term debit says whatever the expenses you incur in the business, you debit them or you write at the debit side, and whatever the incomes which you earn in the business, you write them in the credit side. And there's no science behind this. He has just, see, these are the rules. What is the
Yes.
difference between a principle and a rule? Principle is something which is universal. Rule is
Right.
something which is specific. Am I right?
Right. Yes, sir.
So like every action has an equal and opposite reaction is a principle, not a rule. Fine.
Yes.
When I give rules, that means to be followed. So
Before.
nothing much you need to research in Google. What is this? And there's no science behind this. These are the rules to be followed. That's it. Now,
Right.
under real account, debit what comes in, credit what goes out. They are just categorizing the things between debit and credit. Okay.
Mhm. Yes.
Now, as I told you, the personal account is nothing but it deals with a particular person and the common sense prevails because a person can only be a receiver and a person can only be a giver. So here what I'll do is I'll write it deals with a particular person
Yeah.
with a name. So with person, I mean person can be a natural person or an artificial person. With natural person, I mean human. With artificial person, I mean companies, correct?
Okay.
So if suppose I give you an example that you Fatima paid like 10,000 rupees to Mr. X. Okay.
Yeah.
So who is the receiver of cash? Mr. X, correct?
Mr. X. Yes.
And if I say Fatima has deposited 10,000 rupees in State Bank of India. So who is the receiver there? State Bank of India,
State
correct?
Bank of India. Yes, sir.
And what would be the credit entry?
The credit entry would be uh
Just try. There's nothing like you should give the answer like that should be correct or wrong. Just try about it. See, when you are depositing cash in the bank, debit
yeah.
the receiver is the bank. What would be the credit entry? What idea you have?
Uh
Don't worry. Now, if you think that it is debit the receiver bank and credit the giver Fatima, it would be a wrong entry. Okay.
yeah, because
So
the
what?
credit would be to me only, my account.
No. When it is to your account, that means money is coming to your account. Okay.
Yeah.
So it doesn't go in that way. I will tell you what happens. See, when you are depositing money in the cash, so it is debit the receiver bank, correct?
Yeah.
And what is going out from your account? You're
The
depositing what in the bank?
the cash.
Cash. So what is going out from your account? Cash, correct?
10,000 cash. Yeah.
Yeah. So 10,000 bank has received. Why? Because 10,000 you have deposited, correct?
Deposit. Yes, sir.
Yeah. So actually now what happens? Like this bank is nothing but State Bank of India. It's your account only. So what
Yeah.
you are doing is from your cash account, you are putting the money in bank account. Am I right?
Yes, sir.
Yeah. So what happens like in this case is this comes under personal account concept
Okay.
and this comes under real account concept. Now, what is this? See, there can be a debit here. That debit can be this. But it is not necessary that the credit should always be the one which I am showing in the combination. If this is the debit, this can be the credit. If this is the debit, this can be the credit. If this is the debit, this can be the credit. Understood?
Okay. Yes.
What matters is debit should be, every debit should have a equal and corresponding credit, but the credit should not be like in the combination. Understood?
Okay. Yes, sir.
Yeah. So like here what happens is SBI Bank. So SBI is the receiver, and from your cash, from your bank, from your account, cash is going out. Okay. Yes. I'll just give you a small rule here. See, what happens is if you are showing any of the asset in the debit, that means the asset value is increasing. These rules are given in the textbook. I'll show you. Okay. If you are writing the asset in the credit, that means the asset value is decreasing. Understood? Yeah. So here the money is going into bank account. So which account is increasing?
The SBI Bank.
So can I write that in the debit because the asset value is increasing there, correct? That bank account belongs to whom? To you or some other individual?
It belongs to me.
So your bank account is increasing. Your bank account balance is increasing. So where will I write that?
On the credit side?
No. See, what did I say? Whenever your asset value increases, it should be written in the debit side. Am I right or wrong?
Yes, sir.
And whenever the asset value is decreasing, it should be written in the credit side. Now what is happening is this bank account also belongs to you, and this cash is at your home. This also belongs to you. But what is happening? The money, you have 100,000 here. Yeah. From here 20,000 you are just depositing here. Okay. And you have some amount here already. I will not go into it. Now when you deposit 20,000 from here, this account will increase by how much?
20,000.
So shall I put that in the debit?
Yes.
And this account is getting reduced by how much?
20,000.
So shall I keep it in the credit?
Yes.
Now that justifies or not?
Yes, sir, it does.
Yeah. So if you think in that way, these are rules. If you go with the first version, which I explained you, simply you can say, yeah, this is debit the receiver and credit what goes out is cash. That's it. Yeah. So either way you're able to understand. Am I right?
Yes, sir.
See, whenever you will be going into Google, you'll be researching this. You'll be doing a Google search. Like what I studied is like how I should interpret. So you will find these both versions there. Okay, I'm giving you this kind of assurance. Fine. So this is the ACCA books version, and that is like the version which we generally teach to students in India here. Okay. When you do a CA foundation course, any CA faculty would explain you only this version. When you study for ACCA under some ACCA faculty, he would explain this version. Understood?
Right. Yeah. Yes, sir.
So now keeping this in mind, we will go for the second and third one, and we'll do a journal question right now. Okay.
All right, sir.
Yeah. Just give me a second. So when the exact reverse goes for liability. So if asset account increases debit, if asset account decreases credit. If liability account increases, if liability account decreases debit. If liability account increases credit. Am I right?
Yes, sir.
So it is exactly opposite to the asset. Fine. Now.
Yes, sir.
Second, this is the first entry. Second entry is any expenditure which happens in your business. So we can can you give me some examples of the expenses which happen in the business?
The rent.
Yeah, you pay the rent of the office, you pay salaries to the employees, electricity bill, printing and stationery, postage and telegram, any expenses, you have to always put them in the debit.
Debit side. Yes, sir.
Yeah, and always you should put your incomes in the credit. Fine.
Credit side.
So we will come to the double entry system rules given here in like in your book. As per that, we will see what rules they have given.
Yes, sir.
They have changed the like new book. Previously, chapters were like something else. Now the chapters are something else. Like
Yes, yes. I think they've changed it.
they changed it. Yeah. So here comes. So this is a double entry system. In asset comes in the debit, and yeah, I'll just give the rules here. We can have a discussion on that.
Yes, sir.
These guys have explained things in very like detailed manner and in a very easy way.
Yes, sir. The BPP is very deepish.
Yeah, yeah. I think that is in the. Yeah. So these are the very simple general rules. As I said, when I speak about asset, when the asset value increases, it is always in the debit.
Debit, yes, sir.
Okay. And if the liability decreases, it is always in the debit. And if I speak about any expenditure,
Right.
that means if I write any expenditure, it is always in the debit, correct?
Debit side, yes,
They
sir.
did not say increase, decrease, but they clearly said expenditure. If you write, it is always in the debit side.
Debit side.
And if I speak about credit, so I justified even right now, when you deposited your money in the bank account has increased and your cash account has decreased, correct?
Decrease, yes, sir.
So one asset is increasing simultaneously, the another asset is decreasing. So asset
Right. Yes,
decrease is credit. Yeah. And income is always in the credit, correct?
credit side.
Yeah, this is the way you understand the questions. Now we will just see the versions in what they have explained here. And
Yes,
all
sir.
the debit should always be equal to credit. Fine.
Yes, sir.
So asset increase in debit, asset decrease in credit, liability, like it's always reverse of asset. So here if the asset increase is in debit, liability decrease will be in debit, correct?
Debit, yes, sir.
So what can be the example of this, if you can give me?
An increase in asset?
Increase in asset, I have explained you that you
Yes.
deposited money in the bank.
Yes,
Any
sir.
kind of liability, any kind of liability. So suppose we'll take a like a transaction, na? So
Yes,
there
sir.
was a supplier who supplied goods to you, Mr.
Right.
X. Okay, I will just put a journal entry. Let's say Mr. X. Okay, I'll just put it here. Purchased goods from Mr. X worth $10,000. Okay, so here we purchased goods from Mr. X of $10,000.
Right.
Did I mention in this statement anywhere for cash?
No.
Some goods will have some value. That's
Right.
understood fact. But if I don't pay cash, that means I'm making a credit purchase. Isn't it so?
Yes.
Isn't
Yes.
it so? So what will be the entry I write for this? So Mr. X is what to me? He is my payable. Am I right?
Yes, sir.
So already I'm maintaining this kind of relationship with Mr. X and I am supposed to pay him 10,000 already. Let's say I'm supposed to pay him $50,000 already. So so Mr. X account is already showing $50,000. I'm supposed to pay to him.
Yes.
I bought some $10,000 worth of goods from him. Now you
Yes.
tell me I'm supposed to pay 60,000 to him or not?
Yeah, you are supposed to.
So what would be the entry here? The entry would be, can I write here purchase to payables?
Yes.
Come on, see, don't hesitate in like saying anything. If it's right or right, it's wrong or wrong. See,
Okay.
purchase to payables means what? Purchase to payables means what? See, whenever you purchase goods from someone, is it an expenditure or not?
It is an expenditure.
So I am writing that in the debit side. That's
Right.
it.
Yes, sir.
And see, I'll tell you the another version of this also. Don't worry.
Yes.
Secondly, already I was supposed to pay how much to my payable? 50. Now I'm
50.
supposed to pay how much?
10 more.
So increase in liability comes where?
It comes under debit.
No, see here. Where am I pointing?
It comes under credit.
Yeah, so I'm putting it in credit side. Am I right?
Right. Yes, sir.
So I'll show you two versions. I'll just prove you what I'm saying here.
Yes, sir.
So the expenditure I've put in debit, and my already I was supposed to make payments of 50,000 to Mr. X, which I did not make, which is still prevailing, and 10,000 in turn increased. So my total
Yes.
payables are 60 to him, but this
60.
time my payables has increased. So I'm putting that in which side?
In the credit side.
Credit side. Okay. Now next entry. Paid 30,000 to Mr. X. Now you see. So now I will show you the second version, what we teach to students in India, and what n number of videos will show you whenever you like kind of research or do. So no
Yeah.
need to go for that. I'm there here. Okay. Now,
Okay.
so when you then to Mr. X, you were supposed to pay 60,000. Now you're paying how much to Mr. X?
60.
No, 60 you're supposed to pay. How much you're paying?
Yeah. So
I've written 30 here.
yes, yes.
60 in total I'm supposed to pay to Mr. X. I'm now paying him 30,000.
So that means you need to pay 30 more.
I'll put entry. I'll put entry. Now, did you understand the question what I'm showing here?
Yes, sir.
See, Mr. X has a long history of like there are historical transactions which happened between us and Mr. X. Already 50 we were supposed to pay, 10 more we have purchased the goods from them, and now the total liability is to the tune of 60. Now what happened is I am paying 30 to Mr. X. This payable which was in the credit now will come in debit. Why? Because the liability would decrease or increase?
The liability would decrease.
Of course, it will decrease. Fine. So I'll write here payables in the debit, okay, to cash in the credit. Your asset account is decreasing or increasing?
The asset account is decreasing.
Decreasing, because your cash account is decreasing here. From cash account, 30,000 is going out, and the payables account which was already of 60, okay, we paid 30. So it is reducing by 30. Am I right?
Yes, yes, sir.
So decrease in liability comes where?
It comes under
Debit.
debit.
And decrease in asset comes where?
Credit.
Credit. That's what I wanted to explain you. Understood?
Yes, yes, sir.
Can you put these two entries in your book?
Yes, sir.
So we'll try to justify what the boxes they have given by creating some examples. Okay. And after you note this, I'll give you the Indian version also. So whatever is easy for you, you understand. Okay.
Yes, sir.
Yeah. I hope the lecture is not that boring, isn't it so?
So no, it's not, sir.
Yeah, you're understanding. Thank you.
Yes. I should note this down, right, sir?
Please, yeah. Why? Because see, the studies which happen should be conceptually. Okay.
Right.
Book
Yes.
reading is not required. If you learn this in such a technical way, you will never forget things.
Right, right, sir. Yes, sir.
Yeah. Now the Indian version says when you purchase goods from Mr. X worth 10,000,
Hmm.
debit what comes in. So I'll write debit what
Comes in.
comes in. What comes in goods in form of purchase. That is real account. Correct or wrong?
Yes, yes.
And credit the giver Mr. X
Mr. X.
personal account concept. Correct?
Yes.
This is the Indian version. So if you understand this, okay. If you understand ACCA version, that's even okay. Now here you paid to Mr. X. So of course, since Mr. X is a human being, debit the receiver who?
Um,
Mr. X.
Mr. X.
Personal account concept.
Yes, sir.
And credit what goes out?
Uh,
What are you paying him?
10,000?
Yeah, no, 30,000 I'm paying, no?
30,000. Yes, yes, sir.
Credit what goes out? Cash. So when
Cash.
cash goes out, it is what? Real account concept, correct?
Real account concept, right, sir?
So you can put it in this way also. What is more easier to you, Fatima, the previous version or this version?
I'm confused, sir.
Don't be confused. Don't worry. It's very simple and easy. Like we are creating situations and trying to like get the concept clearly. Okay.
Yes, sir.
So you understood the first entry and second entry now.
Yes, yes, sir.
I'll just put one question in front of you. Now you have to answer. Okay.
Yes, sir.
So this is the entry.
Mm-hmm.
So this is the question. Now you have to answer this.
Commence business with cash.
Yeah. So here also some points are given. I'll just tell you. See, here some points are given. So these are all debits. So
Yes.
expenses, like any increase in the asset is debit, any expense is debit, any drawings is debit, correct?
Yes, sir.
And these are all credits. Any increase in liability is credit. Okay. Any income is credit. Any capital is credit. Okay.
Yes, yes, sir.
I'll tell you how it goes. So when you start business with cash $100,000, what would be the journal entry? So what is coming in the business?
Uh,
See, Fatima, you started a business with $100,000. You
100,000.
are
Yes,
invest
sir.
yeah, you are investing $100,000.
That's
What
an
are you
investment.
giving to your business as capital?
100,000
Money, cash, correct?
money. Yeah.
So debit, like increase in asset. Am I right? Increase in asset is
Yes.
debit.
Right. Yes, sir.
So when cash comes in to the business, it
Mm-hmm.
is increasing. It is nothing but increase in the asset. Your cash account has you had a empty box. That box has how much now?
It has 100,000.
That is increased. Your the box which has nothing has 100,000 right now. It has
Right. Yes.
nothing. That means $0 now has $100,000. So your asset
Yes.
has increased or wrong or not?
It has. It has increased.
It has increased. So that is what I have put it in debit.
It comes.
Second, yeah, to capital account. Why I'm writing this capital account in the credit? Because the rule says capital always comes in credit.
Okay.
What does the rule say?
The rule says capital always comes under credit.
Or else if you want to understand this in this way also you can understand cash account debit to Fatima capital account. Okay, so you
Yes.
are giving you are investing money in the business. That
Mm-hmm.
money has come in the form of cash in the business and that is also a capital to your business. Correct?
Yes. Yes, sir.
So since it's a capital, I am writing Fatima capital account. Okay. This
Right.
capital is also shown in the liability side. Where it is shown?
Liability side.
Yeah. So
That is
increase
credit. Debit
credit,
side.
always credit. Yes, it is
Yes.
always credit. Capital is always credit. Okay.
Credit.
So write
Yes, sir.
on this entry. Or else like if you see in another way, debit what comes in, can I write it here? Debit what comes in.
What comes in? Yes.
Debit what comes in cash. Correct? Which
Yes.
account concept? Real
Real.
account concept. And credit the giver Fatima.
Yes.
Okay, fine.
Yes.
So you understood in this way also, you understood in this way also. Anyway,
did.
you should be able to understand. Understood, no?
Yes.
Yeah, please write it down. I'll put more 4 questions right now.
Yes. Yes, sir.
Yeah. Now I'm taking expenses. Okay.
Yes, sir.
We will cover up everything. Paid rent $10,000. Now, Fatima, if I ask you a question, what can be the entry for this? So rent is a expense. Expense always comes where, Fatima?
Debit.
Very good. So I write rent account debit.
Yes, sir.
2. What am I paying, Fatima, for this? Which
The
account is getting affected?
the
When I pay rent of 10,000 to someone, what I give to them in their hands?
the cash.
Of course, cash.
Yes, sir.
So I had 50,000 in my cash account. Out of that, 10,000 has gone. So this has decreased my asset or increased my asset?
It has decreased your asset.
Absolutely right. It has decreased my asset. So decrease in asset comes where?
It comes under debit.
How come? Where did I write this
Okay,
one?
okay. No. So 1 second. Uh, if there is a decrease in the asset, it goes under credit.
Credit, of course. That's
Yes,
the
sir.
reason I've written in credit.
Yes, sir.
Okay. So if you see as per our ACCA rules,
Yes.
ACCA rule is very clear that whenever you have an expense, put it in debit, and for expense you are paying cash. So that account is getting affected and that is decreasing. That
Yes.
asset is decreasing. Whenever asset decreases, you write in the credit side, correct?
Yes, sir.
If you see in another version, debit all expenses.
Yes, sir.
As per that, rent I wrote in debit side, correct? Debit all expenses rent. Which account concept? Nominal.
Nominal.
And credit what goes out?
Credit.
What is going out?
The rent.
Rent is going out, but from which account? What is going out physically?
Cash.
Cash. Credit what goes out? Cash. Okay.
Yes, sir.
Real account concept. So in either ways, I've explained you right on this one. Now we'll see
Right.
income case. Then I'll put some 10 questions in front of you. You have to explain me everything. Okay.
Yes, sir.
Yeah. Don't worry if it doesn't come in the first day, second day, you will be very perfect once you again see the
It's
recording.
very confusing, actually.
It may be, but don't worry.
Yeah.
Differentiation, integration, all those things you have learned, na? So now this would be somewhat like Greek and Latin.
Yes, sir. Yes. Sir,
Yeah.
as far as I mean, I have seen this,
Hmm.
the debits and credits are written on the left and right side, right?
That is ledger. I'm teaching you journal right now.
Okay, so in the journals, you just have to write it.
Yeah, in the journals, you record it in this way. When you
Okay,
do ledgers, you classify them. You make under T accounts like this,
okay, okay.
like this. Are you seeing this?
Yes, yes, sir.
So before you cannot directly make this. First, you have to make that, then you make this.
Okay, okay, sir.
Okay. See, they have written here, no?
Yes,
So sole trader pays 6,000 in the bank account. So when he pays 6,000 in the bank account, which account is increasing? That means bank account, you can take it as a cash account only. Okay.
right. Yes, sir.
So your asset is increasing, that comes debit, and capital is increasing, that comes in the credit. Correct? Capital
Credit. Yes, sir.
comes in the credit. That's what. Now next entry. Let's do this. Sold goods worth 10,000 to Alex. Now we have to see a journal entry for this. Okay.
Okay.
So now you tell me you are selling goods to Alex.
Yes,
Okay.
sir.
And that too, you're not taking any cash from Alex.
Okay.
So which what accounts would be like getting affected because of this? So Alex is someone with whom you're already having some relation,
Mm-hmm.
business relation.
Okay.
Alex is a regular customer, who regularly buys goods from you. So already
Yes.
Alex is supposed to pay us 50,000. His account is showing what?
50,000.
Now still Alex has purchased 10,000 of goods from us.
Mm-hmm.
Now his accounts will increase by how much?
By 10,000. So it will be 60,000.
60,000. So
Yes.
Alex is nothing but what to our business? He's trade receivable. Am I right?
Right. Yes, sir.
So like receivable account debit to sales account. Am I right?
Yes, sir.
Why I wrote this entry? Now Alex is already a receivable for us and
Mm-hmm.
we still sold goods worth 10,000 to Alex. So now
Alex.
Alex in total is supposed to like we are total, the total receivable from Alex is how much? 60,000. So his account has increased or not?
It has. Yes, sir.
So asset account increase. Am I right?
Yes, sir.
Debit. And
Debit.
it is an income. Revenue sales is an income. Credit. Finished.
Credit.
Just make a note of this. And if I go with my version in
Mm-hmm.
India, debit, see, if I'm selling goods to Alex, who is
Right.
taking the goods from me?
Alex.
So debit the receiver Alex. Okay.
Right.
Debit the receiver because he's a person, na?
Right.
Debit the
Yes.
receiver Alex. So I'll write personal account concept. Okay. So,
Yes.
and then credit what goes out. Credit what goes out from my business? Goods in
The
form of
goods.
sales.
Yes, sir.
See, I'm writing both the version. So this is real account concept.
Okay, sir.
Shall I keep only one or shall I explain both the things to understand?
Uh, I think both
Yeah,
would
yeah,
be
yeah.
easy.
Good, good, nice. Yeah. Students should not like search comfort zone in studies.
Right.
They should
Yes.
learn from every angle, correct?
Yes. Yes, sir.
The one who searches comfort zone is not fit for any professional course.
Right. Yes, sir.
Once if you have done this, inform me. I'll put some 4 questions in front of you. You should
All
explain me
right.
what is increasing, decreasing. Okay.
All right. Done, sir.
Okay, now you can take your time. Tell me
Yes,
the
sir.
answers. I'll put it here. आप अपना analysis, you can do your analysis and tell me. I'll just put the answers here. Okay.
Yes, sir. Paid the salaries
Yeah.
is a debit from my side.
See, paid salaries, of course, when it's if it's your company, if you're paying salary to your employee, it's an expenditure for you, correct?
Yes, sir.
So you put your expenses always in which side? If your
Mm,
expense increase or whatever expense, you put it in which side?
debit side.
Debit side. That's absolutely right. Salary account debit. And then
Deb
if this account is like debit, which account would be credit?
the employee account.
No, see, don't think from employee's perspective.
Okay.
Employee is not your like it's you're seeing your from your business perspective.
Yes, yes, sir.
Employee will see from his own perspective, from his personal perspective. It's your business.
Right.
When you're paying salary to your employee, what are you doing? What are you giving him?
The profit from.
See, one employee is working in your company. You are giving
Yes.
something in his hands. Something.
The cash.
Of course. So
Yes,
you
sir.
had, see what is happening here. You're paying salaries to your, like already he is working in your company.
Yes, sir.
He has to work for 12 months, correct? So practically we should think, Fatima, practically, you don't be very nervous and you enjoy your studies. Be very calm,
Yes.
cool, and don't be nervous. Think in a practical way. How to think in a practical way? Come on. Some employees working in my company. I
Yes,
have
sir.
to pay him a 12 month salary. So I
Mm-hmm.
have paid him 10 months salary. I have paid him some salary of 10 months.
Yes,
Okay.
sir.
10 months happens to be like $100,000. I'm supposed to pay him
Yes, sir.
10,000 now. So I'll pay him 10,000. His salary account will increase, and salary account will increase in the sense it's expenditure. Salary is always where?
Mm-hmm.
Debit, correct?
Debit.
And your
Yes, sir.
which from which account the money is going out to his account?
The
From
cash
which
account.
account? The cash account. So your
Right.
cash account already had $50,000. From that you paid 10,000 to him. Your cash
Yes,
account has decreased now. It has become 40,000. So
40,000.
now decrease in the cash account is decrease in asset. Am I right? It comes in which
Yes,
side? Credit.
credit side.
Yeah, to cash account. So I'll write it here. Debit expense and decrease in asset account.
Asset account.
Credit. Okay.
Credit. Yes, sir.
And if you take in that way, debit all expenses, nominal account concept, because I've explained you as per the double entry system, and
Yes, sir.
credit what goes out? What is going
The
out?
the cash.
Cash, of course.
Yes,
Real
sir.
account concept.
Account concept.
Yeah. Okay. So
Yes.
you can write this in detailed way. Your wish, something if you're getting confused in both, you can put it one. But both the things are very easily understood.
Right. Yes, sir.
I'm like thinking I took a very
Complex chapter, sir. So I'm done with this one. Hello. So can you hear me?